Welcome to Back to the Futures. Thank you to everybody who joined for the group coaching session. And I love these sessions because we have Anne Marie with us. How are you today, Anne Marie?
I'm doing well. Londoners, they eat very late at night. And so eating early has been great. It means we can get into all kinds of restaurants that otherwise would never have bookings. But they eat way too late around here. Like 11:45, they're still making dinner reservations.
Really?
Yeah, it's insane.
My goodness. Yeah. Anne Marie is in London right now. Are you going to be spending the holiday there?
I am. I'll be here until the new year.
Oh, nice.
Yeah. Yeah.
Doing a considerable amount of traveling.
I know. Nice. I am looking forward to unpacking my bags for more than a week. So, yeah.
Well, you got one of your kids over there working, so.
Yeah, that's right. We do. Humping out.
Right.
Oh, I wanted to talk about, before we jumped into the failed auctions, I wanted to talk about what happened this morning on the 1 minute breakout.
S&Ps?
And how it broke the top, and then it didn't do it quite as well, did it? Where are we?
I did not. Oh, yeah, I did not take it.
It was hard. It was a hard opening minute, and so a lot of times.
Yeah, it was a little big, a little more risk on it because
I heard you say that.
Range.
Yeah, the one thing that was super important to me, why I didn't take it, was because we had a broadening formation open up just before that 8:30 number. We were sitting, and then we had the GDP number. It expanded really wide, and then it started giving everything away. So a lot of times what I'll do there is put a line at the pre-market low just before a number, and then at the pre-market high, and then I'll watch for those numbers to break instead of using the 1 minute open. So I had a low. I was actually looking at the NQ, and I had a low sitting in a region that told me that, hey, I gotta watch the price action here. And so a lot of times traders go, yeah, I see that's how that opening range trade works when it works.
Right.
But what happened this morning made it a little tricky. You would have gotten washed out just a bit if you'd taken the first tick out.
Right.
Or even the first tick down. And so when I see a big broadening wedge in the pre-market or a broadening range that collapses, I'll normally wait just a few more minutes for the market to actually tell me what's going on.
So this is what you're talking about, was the 7:30 numbers expanded.
Yes.
Excellent.
And so when it started pulling back and it brought me into that opening range, I said, you know what? I'm just going to wait. Now, I could have been wrong and it could have barreled right out. But as soon as it tried to get up over that first 1 minute and it failed, then it gave me that first essence of the failed auction up above the breakout line. And so that is a key anchor to what we'll be talking about today in terms of, hey, listen, I tried to get back to the old highs in the pre-market, but it just didn't happen.
Right. Yeah. And what doesn't happen can be equally as important as what does.
Exactly. And that's really the purpose of today's study time. It's about this failed auction. Now, to be very frank, I had a real trouble with this notion of failed auction or excess
Uh-huh.
until I put myself in the Apple market. Like I sent you a note about how the apples might look if I'm in an Apple market and prices are moving up and I want to sell all my apples. That failed auction is somebody coming in and going, you know what, I'm not going to pay you what it is that you want. And
Correct.
so, although I have them to sell, no one's buying.
Mm-hmm.
So, what I wanted to look at was how does that look on a volume profile? Because, we talk about volume profiles all the time. So, let's take a peek at that first. And
Okay.
then we'll talk about maybe other places that saw the failed auction today in specific.
Well, the failed auction, I believe, is easier to recognize on TPO charts or market profile.
Okay.
Okay, because you get the sense of time in the market profile. You don't have that same sense of time in the volume profiles.
Gotcha. So is that what I should be looking at when I say to myself, hey, I'm looking for a failed auction. I'm looking for excess, that is apples at the market that nobody wants to buy.
Right. And that's, in essence, that is, you try and auction your apples at $1 a piece and nobody wants to buy them. What do you have to do?
Exactly.
You have to
You got to
advertise
drop the
price.
price. Yeah.
You
Or
have to
somebody
advertise
else is
price
going to
lower.
sell. Yep. Absolutely.
Okay.
Absolutely.
So, and you can see it on the volume profile if you have a chart that matches or lines up with your volume profile. So this is the high in the NASDAQ yesterday. Okay, so opening range was the low of the session. We rallied. We took out the all-time high, which was in the overnight session the day before, the night before. So we took that out. Now, the failed auction yesterday was great because the initial balance had been established. Okay. The next 30-minute bar, the third 30-minute bar, looked above and then came back inside the initial balance. So this little excess tail up here gives us the possibility of a failed upside auction or a finished upside auction, if you will.
Okay, so hold on. We have two things that we have for definition. We have the initial balance, which is the first hour of trading.
First hour, right?
And then we have the time price opportunity tool. How is that different to a volume profile tool?
Okay. Great question. When you look at the TPO charts, okay, now this is the profile from yesterday in the NASDAQ. The volume profile, the variable is always price, right?
Right.
The constant is the volume. Now, volume changes and moves, but we have to have something with which to create the bell curve. So the price is always the variable, and the constant is volume. Okay, now it's kind of hard to say that the volume is the constant because it changes with every tick that trades. Every time there's a trade, that changes. But we have to have the price always be the variable.
Okay, so this actually means that the only way the volume profile chart is built is by the prices irrespective of time.
The volume profile doesn't really take time into effect.
Okay, excellent.
It's the market profile that takes time into effect.
As many times as I've stared down a volume profile chart, that is a bell that just rang for me.
Okay.
I just caught that. So the only thing the volume profile is doing is tracking the volume, and that gets printed when someone buys or
Right.
sells at a specific price.
Right. Right.
Okay,
It just
gotcha.
basically stacks up the volume at each price.
Okay, fantastic. All right,
Now the
I got it.
TPO chart is price is the variable, time is the constant. So that's why we take all the TPOs and we bunch them into 30 minutes. First
Okay,
30
so it's a
minutes.
collection of 30-minute ranges of
Correct.
where
And
price moves.
then you push everything to the left axis, then you get your bell curve.
Okay, very good. All right, I got it.
Okay. So looking at this profile, and we were, I forget what segment, maybe it was group coaching or the power players yesterday. I was trying to get short the S&Ps because this C period range extension was acting very much like a failed auction, a completed upside auction. Some people would even call this an unfair high. An unfair high would be unfair to buyers.
Okay.
Okay.
Okay. All right.
So the idea to get short the S&Ps because the NASDAQ makes me crazy. But I had something with my platform. I could not get the orders in, so I actually made money on it, but not till we broke out the low. But that's a whole nother story. It was the NASDAQ, the finished high, the excess high, the failed auction that had me thinking, okay, this thing is going to turn around. And by the time it did, I had to restart my platform. And by the time it did, we were in bad trade location if we were going to take out that high.
Okay, so let me ask this question.
Mm-hmm.
After that red bar, we see the yellow one,
right,
up there. When price begins to back off of that number, are you thinking to yourself, uh-oh, this might be a failed auction. I need to see what happens on the next bounce up, and then we're taking the trade? What is the actual
trigger
visual setup? What is the setup that says, wait a second, you better look here, this might be a failed auction?
So this was, I think, really kind of a textbook one because C period looked above and then came back inside. D period, we really didn't move much. We just kind of hung around here. And there were three different 30-minute attempts to try and take out that high. Now, at the 12 o'clock hour, I think during the group coaching, I was saying it is going to take an exorbitant amount of energy to take out this high in the NASDAQ. The S&Ps was a different story, but watching the NASDAQ yesterday was where I saw the failed auction to the upside. So, if you take this, you're looking at, let's say we took it right here. And if we're going to extend the range at all, that negates the idea that this excess is a failed auction. Price auctioned higher.
Yes.
So and sometimes they'll just come and get the stops up there and then go. I just got taken out that way off the low in the S&Ps. I'll show you that too.
Yeah.
But that's your risk. So you're somewhere hopefully near the high of the initial balance with your short. So 54.77. I mean that's we're talking 20 points of risk there. But when price got back up here and 3 times it traded back up to this level, I mean, that severely limits your risk. You're getting away with 12 points of risk on this.
Right.
So that's a trade, even if you don't like it, you got to take it. It's too cheap.
Right. Well, full disclosure, I'm in the XFA, and it's one of the $50,000 ones because as I got into Topstep, that's what was given to me. And so I'm not used to trading, having a $1,000 limit on what's happening in my trades. And so I got the feeling that this was going to fade. The problem is I got short and then added my second lot too early and had an absolute, it just ran straight up against me, and I got out and I said, you know what? Just because I got in at the wrong price doesn't mean I'm wrong about this market rolling over. And
Right.
so I took it again, and by golly, it took me straight to my $1,000 daily limit and shut me out for the day, which is, you know what? It was great because today I came back and my head was clear and I just got it all back.
Good.
But it was very interesting to see. I knew I was waiting for the failed auction. For me, it was a topping or an exhaustion formation yesterday that I was looking for. I just forgot, literally, I forgot that I was only allowed to trade 2 contracts
Oh,
until I got over the 1500. And
right.
so it was a great learning lesson for those of us that are new in the FXA. What I want to do is be, totally transparent with everything that's going on there.
Sure.
And because I like the rotation trade, you just have to come back and retool based on what parameters that you're given. And so it was a good learning lesson for me.
Right.
Very, very well. All right. So in this space, what I want to try and get us to do is sort of put some wet cement down. And maybe we'll say, let's put cheesecake down on the line. So it's firm, but you can slice through it in terms of
Right.
risk
Okay.
and what we're looking at. So the failed auction shows a high test that immediately backs down on the TPO into prior prices.
Right.
That's the first thing that makes me go, uh-oh, this might not be a continuation. This might be a failed break, correct?
Right. Correct.
Okay. So once we have that set up and we go, okay, the failed auction looks like this. I have a string of prices, either up or down in the TPO, that immediately reverses into the body. If it's a high, it reverses into
Back into
congestion. If it's a low, it rises into also congestion.
correct.
Right?
Yes.
At that point, it's still either a pullback that can be bought to break out, or a retracement that can be sold in a further breakdown. Right?
Correct.
So we have 2 gates.
Right.
The first is the site, the second are the gates.
Right.
So at any general point, we don't quite know which one it is. So what we have to do is pick one and then manage the risk.
Correct.
Would we say that that's correct?
Yes. Yes.
Okay, so let's suspect that the speed of movement, I don't know what you think about this, but every time I see massive speed to the upside, I sit back and go, okay, let's see if this is a bunch of shorts just getting clipped,
Mm-hmm.
or a bunch of longs just getting their stop hit and things move back to normal.
Right.
So if we were to say to the trader, hey, listen, we're looking for the failed auction. The second thing that should happen is a retest that is lower than the high, if we're looking for long, like our
Right.
picture showed, a retest on your TPO. It showed a retest that was a lower high.
Right.
And that's where you said that the risk got cut in half.
Right.
Literally.
Yes.
Right? Right there.
Yeah. Right there.
Right? So as you're looking where those yellow and green ones are, right? And the
Right.
yellow and greens are just separated by time, correct?
Right. Correct.
Each color is a different time, a different 30-minute trigger or
Correct.
event or whatever.
Right.
Okay.
Yep.
So if we're looking at that top, that's what we need to really see. If we're looking for absolute sweet spots, we want to see the bounce to the lower high. That's the sweet spot, correct?
Yeah, that would, that would, in a perfect world, that would be good.
Yes. So we're looking at perfection,
Right.
and then we'll look at the squigglies, right? Because
Right.
nothing's ever perfect, but if the perfect thing does show up, we can go, oh my gosh, that's a textbook failed auction with a failed retest because it's failed to retest the highs.
Right.
Yeah.
Yep.
Okay. So that would be the ideal next setup. And so once that happens, what we can do then is let our stop be the high tick or one tick above the high tick.
Yeah, but that's typically where the stops are going to be if it's
Okay, so maybe 5 ticks.
Yeah, I mean, I usually try and give it a little bit of room.
Okay, so that's perfect for us to know. And John says the reason we do that is because everybody knows where that stop is. So you don't want to get run right into the stop. That's happened to me. Oh my gosh.
It just happened to
100
me a half an
times.
hour ago.
Yeah, it happens all the time. So
Yeah.
we stretch that out a little bit so that the wiggles don't catch us.
Right.
All right. So now let's talk about the first target in a failed auction. So first, let's recap again. We have the setup. The setup is exhaustion on the upside, meaning price action moves to a region and it can't get any further, it immediately rejects from that range. That's the
Right.
first thing. It bounces and holds a lower high for our sweet spot. And then we can take the trade there, and the risk is just above the high.
Correct.
Several ticks so that we don't get caught. Now, that's our trade formation ultimately. We pull the trigger. Here's the question. Do we pull the trigger on the first failed retest? Like when it comes up. Now let's go to some candlesticks. What day is this? Where is this?
This is yesterday.
Yesterday. Let's look at yesterday's NQ and maybe on a 2 or 3 minute chart at that breakdown area.
Yesterday's high.
Yeah.
3 minute.
Yeah, 2 minute, 3 minute, whatever. Yeah.
So there it is.
Okay, great. Perfect. Okay, so, oh yeah. So,
9:30.
yeah, there's
Yeah,
the
so it was
9:30.
the extension was right at 9:30.
Mm-hmm.
And it came back down, and here's the 10 o'clock high.
Okay.
Here's the 10:30 high.
Okay.
10:30 is right here, so here's that
Mhm.
bar. Now here's the 11 o'clock.
Mm-hmm.
It comes all the way back up. Noon.
Into the 1 minute candlestick, right?
Yeah,
Into the
well,
1 minute
I mean,
opening?
almost. Yeah. Yes, I think
Right.
that's the first time it kind of takes out
Right, because that's the 1 minute
any part
right
of
there.
the excess high.
Yeah. Right. So there's that high. It comes off of that. So really, we have 2 opportunities to take this failed auction trade if we are looking at it on resistance to support. It came right into that yellow line. What is that yellow line we have right there? That pale yellow?
This here,
Yes, sir.
VWAP.
Okay, great. It comes right into the VWAP.
Yep.
Bounces. VWAP's flat. My vote on the VWAP is as long as it's flat, it tells you you're going to trade above it and below it because it's at equilibrium. And when you've got equilibrium like that,
Mhm.
a flat VWAP tells you do not look for trend until it breaks and confirms. And so it hits there, comes up. So you literally could trade the failed auction at the very top when that first 1 minute comes in and you see the failed retest on looks like about 6 candles later. 1, 2, 3, 4, 5, 6 candles later for the entry point. That's
Here?
about, no, that's way back there. Yeah. One more candlestick over to it's before 10 o'clock, way before 10 o'clock. I'm saying at the first pass,
Here.
no, yep, right there. Right there, 942, what it gives us is a break of support and then a failed bounce that gives us another lower high, right?
Right here. Right here.
Yes. So in that space, if you're just looking at raw candlestick formations, you can see that lower high, this is my favorite trade to take, right? I say every time, 1, does it fail to head higher? 2, does it break support? And 3, does it bounce to give me a lower high? And all of that is certainly there because I would call the support action really that area right around that zone, right? So it bounces, gives me a lower high, and so I'm able to go short in that region. The reason that I executed poorly, oh yeah, great. The reason that I executed poorly is really threefold. 1, I didn't know all my parameters in terms of how many contracts I got to use. 2, I underestimated the retest of the formations. And then 3, I had $1,000 cap on an unrealized loss.
Right.
And so those things together, and really, I'm in here doing it so that everybody will know absolutely transparently. I have nothing to prove. So I'm super happy to go, no, here's what happened to me, and here are the reasons that it happened. So from that space, you can take that failed auction on that tiny time frame, or if you're looking at that 30-minute chart, it's all the way over at that maybe 12 o'clock.
Yep.
Right? That's your second time that it comes in and says, okay, I'm not headed higher. I'm not headed higher.
Yep.
And so again, I get to use those same mechanics, even if we're looking at pure trade formation. The answer is always the same. 1, am I failing to hold higher? 2, am I breaking support? And 3, have I tried to head to a higher high and not gotten it? I have a lower high, and that really breaks down at what, maybe 12:30? Is that about 12:30, 12:40?
Yep.
Yeah, right there at
And
the
then 1
end
o'clock,
of
it starts heading lower.
At the 1 o'clock candle, it gives us the free entry short, where we can go, you know what, that's how the failed auction looks really from a candlestick perspective, right?
Yes.
So we've got that formation. Now we know what the execution is. We wait for the failure of that support zone, a lower high to be tested. So we've got established risk, right? And then we get into the trade. Let's talk about where we set the targets. So in a perfect world, let's go back to our TPO to help us.
You want the NASDAQ?
Whichever one.
Here's the NASDAQ.
Perfect. So if we go to our TPO, what should we be looking for as first targets? Heavy congestion? Or do we end up trailing it? Where's the first place that you would go to take a profit?
Okay, so my
in an ideal world,
my hypothesis yesterday, I still got my notes right here.
Love it.
Is that it was actually yesterday morning. Hang on a second, I'm gonna find it. This was Wednesday. That was yesterday. For 2 days on the opening call, I was saying And this was, there it is. So yesterday, I really tried to hammer out the point that buyers in the equities on this daily chart, we had rollover. We were directional during rollover. It really seemed to me that the only buyers that are buying the market up here are the laggard momentum traders.
I heard you say that. Yeah. So how did you get to that? What made you say those are just laggards? Was it volume? What was it?
Well, we did add 9,400 in open interest
Okay.
this day, right?
Mhm.
So, and volume is off. You know, it's the week before a holiday. Volume is
Yes.
always going to be off. Now it was actually in the S&Ps. Let me bring up the S&Ps instead. That really kind of said it to me. I guess I don't know. What did we? I lost my volume. Oh, it's all right. So yeah, volume is part of it. We added 9,400 in open interest, putting up an all-time high, and volume was low.
Okay.
I think I wrote it down here in New York. It was just over 4 billion. So that's not even good volume in New York. So volume wasn't impressive. The only people that are that I just it's laggard buyers. Anybody that's buying it up here is late to the party. And once those are all in, look out.
Okay. I get it. So you felt that a combination of low volume in the press higher and the new open interest numbers was a good reason to go, you know what? It's my estimation that we've got laggards here in the market chasing up.
Yeah, and it was difficult to really kind of come to that conclusion because of rollover. We expired Monday. We expired Friday. Monday we had a 500,000 contracts expire and finish and settle in cash. So finally, we're able to get decent, reliable open interest and volume information. Rollover sucks that way; you can't see it.
Okay.
So
this what I'm trying to expose is the nature of the educated guess. How a trader might go, how can I learn to think like John? And although nothing's ever set in stone, you look at these small clues that say, all right, this might mean, and I did hear you say that, hey, listen, we just got, laggards climbing up here, which also told me, you know what, I'm right thinking that we're possibly going to roll over here. I was just too quick on the trigger and then ended upside down for the day. So
yeah.
that being said, let's talk about
Okay,
in the ideal world.
I can tell you where what I was looking at when I sat down on yesterday morning was this. Let me.
And this is a 30-minute chart, correct?
Correct.
Okay.
So here we go. This is what I'm looking at when I sit down in the morning. That's basically 6 a.m. That's when I sit down. Perfect.
Okay.
So we have this, move to the upside, opening range, pays out. We put in a late spike at the end of the day. Now this is another kind of profile opportunity, I think, is what we're saying, for us to do another session on. The late spike is when price leaves balance at the end of the day and you don't get time to show acceptance of price at higher prices.
Okay, so by leaving balance, do you mean leaving the initial balance or leaving the volume balance?
Well, we extended the range at the end of the day and then the market closed. So
Okay, so by,
we basically left the previous range for the day.
okay, so that word balance, you mean, is in the little blue, so that's
Yes.
70%.
Right. That's the value area.
Right,
Correct.
as opposed to the initial balance, which is the 1 hour high low.
1 hour. Correct. So
Yes, okay,
here's what it
gotcha.
looks like on the profile. Here's that late spike on the profile. The
Oh,
market
wow.
left the area of balance, drove higher, and then closed up there.
Okay.
All right. So because the market doesn't get time to show acceptance over time up at that level, we look at where the market opens the regular trading hours the next day.
Okay, so hang on 2 seconds, sorry.
No.
So this late day spike, when we say the market doesn't have a chance to show acceptance, what does that mean?
Over time. Everything in profile is based on, well, a lot of it is based on time. Okay. So
why would it not be accepting if price is moving higher?
well, the price does move higher.
Yes.
But when after that spike to the upside, volume dies. It's the overnight, right?
Okay.
So what we're looking for is where the market opens the regular trading hour the following day in relation to the late spike.
Okay. All right. So maybe the next session we work on our late spike observations.
Right. But this had
because that's part of, yes,
this had a lot to do with
the failed auction.
my
Yeah.
assumption that these are all just laggard longs, momentum based longs, and that we may be in trouble because we opened below the base of the late spike.
Okay.
But we also left the all-time high in the overnight night before last.
Okay.
Markets don't like that.
Okay.
They like it to happen in the regular trading hours.
Which it did the next day.
Which it did right there yesterday.
Okay.
So it took it out, and then we left that excess high in the NASDAQ. And I'm thinking, okay, you know what? There's no energy left up here to take out that high. We're in trouble.
Okay. So the words excess and failed auction interchangeable. Excess being the apples that you want to sell at the market, and nobody's going to give you the price higher than X.
Right.
So you have to start selling them cheaper.
Right. You got to advertise price lower.
Okay. All right. Okay. So when we look at those things and we want to choose our target, what prior levels in prior days might we look at to say, from a volume profile perspective, where it might take some pit stops?
Okay. So the points of control from previous days that have never been revisited in regular trading hours. We had one here that we barreled right through. We had another one right here. Right here, it should be, that we barreled right through. How did this get moved? I don't get it. Okay, that's where that one is. We barreled right through it. The next level, and I think what's going to prove to be an important level if the price continues to move lower, and it really looks like a minuscule level or something that people probably wouldn't even think of, is the afternoon pullback low from CPI day last Wednesday.
Okay.
Right there.
Yeah.
So, and then there's gaps, there's naked points of control, all these visual levels for price to seek. And you know, price doesn't seek it. It's what the traders are looking at. They're going to bring price to.
Okay. So a couple of things happen in this kind of environment that I really want to share. Number one, we've been running up constantly. So you might have noticed on the tilt, a lot of people were buying the dip. And so one of the nuances of using the tilt, now that I'm sitting on Topstep X,
Mm-hmm.
is that let's say you see the tilt and it measures 65% long.
Long.
And
Okay.
then you look down underneath to see, well, what price did they go long at? And then you see how much profit they have and what the next line in the sand might be for them. And I noticed yesterday that all the longs that went long were underwater moments after they got in. Like
Uh-huh.
they'd get in, things would be okay for 5 or 6 minutes, and then they'd all be underwater. So even though the tilt looked big, everybody was sitting on the wrong side because
Right.
they were all buying the dip. And only into the afternoon, when the tilt moved to the short side, did it actually show that people were starting to make money being on that side.
Mm-hmm.
So I think that might be actually one of the things that Michael needs to take a peek at, because he said he had a tough day, just like I had a tough day yesterday too.
Mm-hmm.
But how you use that tilt isn't just, hey, they're heavy long or hey, they're heavy short. They could be heavy long and still be really, really wrong.
Right.
And so there's going to be a puke space for them that will actually flip to the other side,
Right.
which is what happened. And then it became heavy on the short side. So
Right.
that's just a side note in terms of using tilt. I really try to look at it, wow, we are really bouncing, aren't we?
Yeah. This is the trade I got stopped out on. So
Were you looking for long?
yeah, I was looking for a long down here at the base of the late spike from yesterday because we opened
Ah,
above the base. I'm
right.
thinking, this is an opportunity to look for a long, and it took me up by about 2 points. And now, I tried to squeeze back into it, but I was too cheap, so I'm missing
So
missing it
So would that long candlestick wick also be a failed auction?
down here. Yes.
Okay.
Yep.
So we can see what this looks like now. So I'm going to go from easiest to hardest in terms of what to look for as targets. So easiest targets would be the last area of congestion where a region was both support and resistance. And so that's really coming up right now, about 447.79.
Well,
It's,
you could kind of focus on point of control for a target.
yes.
It's
Okay,
it's the
that's
fairest
great.
price of the day.
Yeah.
And on profile, it's the most revisited price of the day.
Okay. So that's certainly one. The next one I would use would be a line that touches, let me see what that might be. Actually, it's right around here. Put your crosshairs at the 3 a.m. time frame. 3 a.m. right there. Bring your crosshairs to the top of those candlestick formations. Right? See how the top of that candlestick and all the wicks of the candlestick
Over
support,
here.
support, support over at 9,
Right.
9:30, and 10.
Yeah.
Those are the things that I look for. Lines that are both support and resistance along the time frame, and you can see them rejecting off that zone immediately.
Already.
Yeah. So I like that for a place where you can go, hey, I'm going to take some profit and I'm going to let the rest of my trade move on through. Now, your trading style is all in, all out. And so
Usually, yeah.
so that might be a great place to go, hey, listen, if I got my failed auction, then I'm in, great shape. And so you'll be able to take it there. So again, with the failed auction, coming in to see that, because that's a 30-minute candlestick and there's so much wicking, really my execution space is going to be on that 2-minute 3-minute, 1-minute time frame at the base of the failed auction near 4760.
Right there.
Not there. That's 4780. 4760 would be the breakaway over at 12 o'clock, 12:30. Yeah, there.
Okay.
That's the auction that failed, correct?
Correct.
Right?
Yeah.
And so if we look at that, you can see it a lot better on that 3-minute chart, and you won't have to wait for that 30-minute candlestick to tell you, oh gosh, that was a failed auction. You can say one candlestick, hey, listen, the very next one fails to hold lower, and so I'm going to watch it come into the next old support zone, and I'm going to let that be my stop if I run into this trade. So that's going to be nope.
No, I'm just
Nope, it
looking at
would
where
be the higher low.
looking at where the base of the late spike was. Go ahead. Sorry.
Yes. Yeah, so the base of that lace, I would stop right there at that 4762, 4760. That would end up being my stop on that failed auction break. And then, I'd be walking it into the old support / resistance areas as my key zones, and then just keep walking it up. I'll slide my stop up off of the one that I want to cover, and then leave the other one to lollygag around unless we start moving sideways, and then I'll just cover them both.
Right.
So that is from that space. Now, last time we were together, I saw a ton of questions that we actually answered in the video, which I was able to put in the strategy lab in the Topstep Discord. But do you see any questions in here in terms of the trade itself? And then the last thing I'll do is, what will the price action look like if we're wrong thinking this is a failed auction? So do we have any questions in there?
Looking, I've got some here. They appreciate your it's refreshing to hear experts in their own right learning on the fly. Shows we all have a lot to learn reading the markets. They like the transparency, right? Mr. Hogue, that last entry was a masterpiece. I loved it, even if your stop limit was hit.
It was, right? And see, I always come back to this. Just because your stop gets hit doesn't mean you were wrong about the trade.
Right.
So when your stop gets hit, don't go, crap, whatever. Just go, okay, is my thesis still correct?
Right.
Well, yes, it is. Well, I just got in at the wrong place, so I got to get right back in.
Yep.
And so if you build a good thesis, it doesn't matter if you fall, you can get right back up and go on. If somebody tries to show me how to balance on a skateboard and I fall off, it doesn't mean that they're showing me the wrong balance. It's just I'm not positioned in the right way according to the theory of how your body might balance on a skateboard. You just have to get right back up on it.
I could teach you. I could teach you that. I was a
I heard you were a skateboard guy. What's funny is I always looked at the skateboard guys, and you hear the name Tony Hawk, Tony Hawk, Tony Hawk, Tony Hawk.
Right.
And you totally forget that these guys are 50 years old now.
Yes.
So I was watching some X game the other day, killing time doing something, because I love to watch X Games, and I love to watch bull riding, because those are the toughest guys that you will ever meet. Listen, there was one guy, my husband's scoffing in the back. So these guys you'll hear them being introduced, getting on the bull, and one of them will go, the announcer will go, well, here's Billy. He's going back for round 3 with King of whatever the name of the bull is. And he's riding with 3 cracked ribs and a broken jaw, but he'll be fine. They're just it's crazy. It's just a tremendously violent sport. He says they have to be tough for 8 seconds. Well, yes, but those are some really big 8 seconds. But
Yeah.
in
Yeah,
any
that's a big
case,
animal.
you just got to get back in, and don't be discouraged if you get stopped out. The
Right.
thing is, don't go big when you're getting in. Go small and learn to add to your position. And that's a real skill that has to develop over time of constantly being right. A lot of times you see people that have good hit rates, they will add to their winners because they know they're moving on the right track, that everything is moving in the right way. And so that's really the big thing. Don't be discouraged. Know that that's what it looks like. And if it washes you out, go, wait a second. Isn't this what I thought it was? Yes, it is. Now, let's say you get washed out, but it turns out that this is not a failed auction and you get acceptance at higher levels. It's super simple, or lower levels, as in
Right.
this case.
Right.
Super simple how that looks. You're going to break your low congestions, and that's going to be the first warning sign. So what do I mean by low congestion? If you look at this chart, you're going to see 3 candlesticks on the 30-minute time frame that open within just a few points of each other, or close within at the very bottom. It would be a close and a close. It would be the ones below here. Yes. Right? They all either open or close right in one area.
Mm-hmm.
If you take the bounce and you go, ooh, this is a failed auction, I'm taking the long. If it loses that congestion area, put yourself on high alert, because that's a signal that says, you know what, the body of my candlesticks or my wicks should not be in there. And I like to choose the higher low at the bottom of that thing that looks like a doji a little bit, that higher
Right
low
here.
there. That's where I'll put my stop. I'll put my stop just under there, and I'll say, you know what, if I get shaken out, that's okay. I'm going to wait until it recovers and looks better for me to get back in. I will not stick around after it loses the congestion of those bodies. I
Sure.
simply will not.
Sure. I gotta straighten something out here. I was afraid Dee was going to yell at me about this, but Dee would classify this as more of a, she says, an auction fade. IB breakouts that fail. She considers those to be the real auction auction failures. So
Okay, so
anything with
yeah.
excess, I kind of view as a failed auction.
Okay, so
I know you were going to
let's
yell at me,
take
Dean.
yes. So here's the thing. There's nomenclature, and then there's something that the trader just looks at.
Mm,
So for me, I've never learned the name of a candlestick. I think doji is the only one I know. Well, no, I know Maribozu, right? So the Maribozu has no tails, and the doji is just tiny with lots of. So I'm not a nomenclature gal. So if we can instead use the term excess instead of this failed auction space, the less names I have to remember, whether it's a fade or a fail, does not impact the trade that comes behind the appearance of the price action.
yeah, I mean, in my opinion, I would say that that's true. I mean, excess, failed auction, they look the same to me.
So I would never be the person that would be the one you would come to in terms of proper nomenclature, because I don't like cluttering my mind with things that are gray that will not impact execution events. And so some people are not like that. They're much more exacting about, no, that's
Sure.
a whatever. And it might mean that a fade might look different overall in some places, but all I'm looking for is where's my execution event once I see the setup? Where's the setup? Where's the execution event? And then where do I complete the trade?
Yeah. What would you call this?
Pick up sticks.
You have your own name for it, right?
Yeah, it's just a mess though,
Yeah.
right? We've got a 3, you know, for the guys that use the Strat. We have a 3 there, and we're working on a 1, right? So we have an outside candle and then an inside candle. And so tomorrow will very likely give us the continuation of what we've got here. My suspicion is as long as we hold the lows, we'll chop. If we break the low, I think we head to test lower edges because we'll have the formation of a lower lows, and those lower lows tell me that price acceptance is going to continue to be lower.
Yeah, I mean, I think we have space for it. It's either going to range for a period of time or we're going to see further pullbacks, in my opinion.
Yeah, and you know, the Santa Claus rally starts tomorrow. So the question is, did the Santa Claus rally come early, or are we going to have another leg up? And I'm, you know, I have to say, I'll buy the dip, but if it breaks the low, I won't be buying it anymore. And so we'll see what happens in the overnight.
Yeah. All right. Well, Anne-Marie, I can't thank you enough for being with us today. I hope everybody got a lot out of this, and
I'll write it up in the strategy lab for us, just like I did for the opening range. And you know, it's important. Like, I would love it if Dee would come in and go, you know what, I would call this an auction fade.
Right.
And then say, here's how a fade is different to a failed auction, to give some nuance to the trader that says, you know, I want to dig a little bit deeper. But, you know, for me, I really am a Forrest Gump trader. I'm like, I'm going to look at the pictures, and whichever one tells me to go, I'll go. Because I don't want any more cluttering up my head.
Trading's like a box of chocolates.
Yes, sadly.
Well, Anne-Marie, thank you very much. You got to get moving on to the next segment here. I always enjoy spending time with you. Blessings to you and your family. Merry Christmas.
Merry Christmas.
Probably won't
Happy
see you
New Year.
right?
Yeah, that's absolutely right. Next time, we'll talk about those, what did you call them? The spike, the late day spike, and how it affects future trading.
Sure.
That's going to be fascinating. I'll do my own studies.
Cool.
Yeah.
Well, thank you very much. And again, God bless you. God bless your family. And keep
you
praying
also,
for peace. I know you do.
My friend. Yes, I do. I do. All right, everybody. Thanks so much. See you.